Gold is getting people's attention. Not just people, but also major hedge fund companies. And I'm going to be talking about one right now that is making a huge move with gold. Let's talk about it as we explore. For those of you who missed it, I did a video a few days ago about Costco and how people are going crazy for gold, even now there. I think it's a good thing, actually, but I did want to talk a little bit about that video before getting into this one because some misinterpreted what I was saying in that video. I believe that you should look out for the best deals possible, no matter where you shop. As long as it's a trustworthy company, you should get the best deal and the lowest price gold as you can. Now, the channel sponsor here is Summit Metals, and I make no apologies for that, but they understand as part of my contract that for me not to be a shill and for me not to change who I am, what I have been on this channel for a long time. That is, people should get the best deal if they possibly can. Now, customer service is very important as well, and I believe that Summit Metals provides excellent customer service, and if there's ever a problem, they are there to fix it, obviously within reason. Notwithstanding, the whole point of the reason why I'm saying this is because people around the world are paying more attention to gold now that the price has reached record levels. And also, we're starting to see more companies and more nations pay attention to gold, especially since 2022, when we've seen a record amount of central banks holding gold. This is big news, folks. But when we're seeing large hedge fund managers make the same move, it's an even bigger deal, I think. And that's what this story is about, as shared with me by a member of the community from Bloomberg. Waratah Capital Advisors Limited is betting on gold to lift its returns this year as investors pile into the asset to shelter their wealth during the global trade war. We now live in a world that is losing faith in the U.S. dollar, according to co-founder Brad Dunkley. Into a letter to investors, central banks, and ordinary citizens, particularly in India, China, and developing markets, have increasingly turned to gold to preserve their purchasing power. Well, I hate to break it to them, but that's old news to most of us. We've always known that gold has been a wealth protector and to protect your purchasing power. Dunkley said he expects that gold will do much of the heavy lifting on the firm's funds in 2025, but two flagship funds, Waratah 1 and Waratah 1X, lost 3.3% and 5% in the first quarter, respectively. The firm's long-biased fund gained about 2%, and its thematic fund climbed 4.5%. Waratah, which was founded in 2010 by Dunkley and Blair Lewinsky, manages about $3.8 billion in Canadian dollars, about $2.8 billion US, for wealthy individuals, family offices, foundations, and pension funds. The long-biased fund, which is named Waratah Special Opportunities and is managed by Dunkley, has produced an average annual returns of more than 11%. And, that is something. But we've seen gold jump up much more than that in the past year. In fact, Waratah says that gold has more upside at this point and jumped more than 45% in the past year. It's pretty remarkable. That means that gold is really, in this day and age, from that time period, it is really performing more like a really good investment rather than as a hedge against economic instability. And there's a word of caution I want to give here later in the video, so you're going to want to stay tuned for that, which I'm actually surprised Waratah is not heeding the advice that they usually would with things like this. Gold has surged to new records this year as investors and traders take a dimmer view of the U.S. dollar. Amid the shifting trade and economic policies, the price of gold touched almost $3,500 for the first time last month. And the metal's value is up by more than 45% over the past year. Toronto-based Waratah expects the prices of copper, natural gas, and electricity to continue rising as the use of artificial intelligence proliferates, and remains skeptical that AI processing will ever be a good business. There are just too many competitors lacking meaningful differentiation, Dunkey wrote. Although I will say that this is something where silver should play a role as well in their portfolio, considering how much silver, no matter who is going to be the dominating AI force, they're all going to need silver. The trillions of dollars being spent to quickly depreciating capital reminds me of the rollout of high-speed fiber optic. Consumers and businesses are going to be the beneficiaries, not the capital spenders, he said. Waratah's long-short equity fund, which has $247 million in assets as of the end of February, increased its exposure to Canadian stocks, particularly in engineering and construction companies, ahead of the company's April 28 election. The firm expects higher infrastructure spending, a promise made by Prime Minister Mark Carney as Canada responds to tariff threats, according to portfolio manager Jason Landau wrote. Other stock holdings include NextGen Energy, a Canadian company with assets in Saskatchewan and has the potential to become a large uranium producer. So they're branching out in this new world, but gold is playing a pretty big role here in their efforts. But the thing is as they look into gold and see what it has been doing, there is potential for more upside, yes. But let me remind you, and let me remind them, if they're listening to this video, which I kind of highly doubt they would, but gold, when it reached that $3,500 or within 30 to 70 cents shy of it, it was at an all-time high when adjusted for inflation. That's a key thing to point out. It has now moved beyond those past two times, which were anomalies in the gold market in 1980 and in 2011. So when you think about that and put it into perspective, we are in uncharted territory. And what is propping up gold right now? Well, central banks holding gold. That has not gone away. But it could change down the pike. And it could change for a number of different reasons. And number two, the tariff and economic uncertainty regarding tariffs and trade in general. We've not been here before. In fact, the last big overhaul shift in tariff policy was back in the late 1890s when President McKinley was in office. So here we are in relatively uncharted territory, and already one deal has been cemented with the United Kingdom, and likely we're going to see more deals come down the pike here soon. But what if, gasp, dare I say it, that trade policy becomes settled and becomes implemented, and there's normalization of the economy and actually is a good thing? There's a potential it could be a good thing, especially considering how a lot of this is, being thought out by a number of different people in the Trump administration. Yea, though, I don't like the idea of yet another tax, but it is the way that is being implemented. We could offset internal taxes here in the United States. There is a potential that taxes could go down internally as a trade-off, especially as Trump is trying to find multiple levels of revenue for the country, including his gold cards, which I'm not sure I'm fully sold on that idea yet. And by the way, I want to be open-minded about tariffs as well, too. I mean, I know that tariffs are taxes, and some of that, at least some of it, by any stretch, will be passed on to us as consumers. So there is that. But also what could happen to spark economic activity within the country with potentially more competitive and lower prices here, and spurring economic activity within the nation itself, the U.S. So we'll see how that plays out. So in other words, we could see good news come out of this, potentially. We should be open-minded about for that as a possibility. Notwithstanding, that it also means that gold could actually come down and consolidate, especially if we see these trades agreements with other nations, and there's more faith in this, the U.S. dollar, and trade. We can see the dollar strengthen or stabilize, and stabilization is a key word here, because a stable dollar does not necessarily mean a strong dollar. And maybe Donald Trump doesn't want that. Donald Trump has been on record as saying that he wants the dollar to be weaker. and in part to as a gift, I guess, if you will, to some of these other trading partners, and that could be the trade-off. But a stable dollar is actually good overall, and actually in some ways is even better than a strengthened dollar, depending on the circumstance. But its influence around the world, considering how stable it is key, and that's what attracts a lot of these other nations, which means the dollar won't be as much under threat, and that means lower gold prices, to the point where some of these nations may say, well, they feel comfortable selling off a little bit of gold, especially with the prices high, and paying down some of their debt with it. That is quite a possibility. So I would say that, and I'm a big believer in holding gold, but for this company, if they're going to make this recommendation to some of their clientele, well, look at where we're at right now. We're at an all-time high, or very near an all-time high, and that could mean that it could consolidate fairly heavily in the coming months. I don't know. We never know what's going to happen. It does seem like there's some upside. Many institutions and prognosticators believe that gold is going to go up even more from here. That is a possibility. We'll see how it plays out. I hold gold no matter what, though, no matter what the price does. And I believe in having it in my portfolio. So very interesting news bit here. And let me know what your thoughts are down in the comment section below. Hope you found this video informative, insightful, and educational. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.